What's up, everybody? Dave Bartosiak, and I have another chart of the day here. This time, my friends, we're going to be talking about Broadcom, ticker AVGO. Now, there's a lot of reasons to talk about Broadcom. Look at this move. Yeah, there's sometimes, I'm not even going to say sometimes, this happens to me a lot. I don't know about you guys, but I'll look at a chart like Broadcom and I'll see like, oh, okay, $40 in November of 2022 and 230. What have I been doing? Where was I? Was I asleep at the wheel? What's happening here? Because I didn't even know, right? And then it pops on your radar and you're just like, what am I doing, man? What am I doing with my life? How did I miss this one? A couple of things to point out. So big 200-day moving average with that positive slope that's helped provide support many times along the line here. So really great move higher. 50-day, it's bounced around along with the stock, which is great. Now we have this huge gap up on earnings. So it was a beat, not crazy beat. The inline on revs, beat on EPS, but it was the AI business that was so great about it, right? They saw like a 220% increase in AI revenues. That's where things got excited. Point out is just there's this underlying theme, I think, where folks are trying to find the next NVIDIA or an opportunity that they believe is as good as NVIDIA will be moving forward. So they're looking for these other names. I think that's why you're having this big jump in quantum stock. You have, jump is we're just looking for other things that are maybe cheaper from a valuation perspective or potential. Okay. Let's draw this fib from the swing low ahead of earnings to what happened immediately following the report. So we had 2 days of a rally. You had 11% Monday, giving back a little bit today. That's understood. Key levels to point out. Should this continue? Obviously, the elephant in the room is this gap, right? Now, gaps get filled. We've talked about this before. But if the market continues to be constructive and rallying, it's going to be tough for that gap to get filled. You want to look for in the intermediate term is sort of where that gap started. That gap started here at the low. So 211.11. Number to keep in your mind at 211.11. And that's smack dab in between this 50% and 38.2% retracement of that move on the swing low. Now, I will say, no, we don't want to go from this swing low. We want to go from just the earnings day and go here. And if you do it that way, you'll notice that today's low of 233.80 is pretty close to that 23. So that first sort of level. And below that, we have 223. Okay. So that's kind of the art behind these retracement levels is there's different ways to use them. Some people go by one school, some people go by another school. Ultimately, at the end of the day, you got to decide what works best for you. Okay. Either way, this gap starts at 211.11. There's no refuting that. So, and if it does get back down there, that's just below this 50% retracement on this shorter time period. Okay. So that's something to keep an eye on for sure. Should the stock continue to roll over here. But while you're just kind of playing over the course of the next couple of days, this range from 230.81 to 251.88 likely to sort of set the stage for the next couple of days. Now, granted, we've got the Fed coming, so that's the wild card that could blow this thing and the other. But it's important to keep an eye on that sort of large range that's in window. And really, just the range of the last 2 days. It's weird to think about like a 2-day range, but when that 2-day range is 210 there's a lot more significance to it. Okay, and you can get more granular, even like I said with these fibs. You just go from this low to this high, and if you're messing around intraday, these are going to provide some tighter levels for you. So you'd wait for a pullback to either the 50 or the 61.8 and buy there and then have some targets. So I think you're going to get a little back and forth here in this stock within that range. So there's plenty of time to let this move develop. I don't think this is something that you have to like jump on right away. I think patience is going to pay. Yes, it was a good report, but worth, going from 180 to 250, and now you're here up at 236. In my opinion, and you'll see, historically when Broadcom does have these big gaps up, they tend to get faded, right? And in this case, it got into that gap, failed above the gap, and then completely fills the gap and gets back to the 200-day. Now, a move like that would look pretty dramatic when the 200-day is down at 155.93, the 50 days at 177.6. That feels like a long way away. But I'm going to be honest with you, too, when it was 186, it came down to 127. And that's a pretty dramatic swing. You're talking June, a high of 185.16, mid-June, and by early August, rather, you're already at 128. So there's a lot of volatility in the stock historically. So be careful and be patient. I think it's really easy to get caught up in this FOMO. Like you're missing out. Like it's never going to come back. Never going to have a chance to get back into it. We've had these spikes up before, even intraday, and it starts reeling back in a little bit. Right? Reels in. It always reels in. It gets really excited and then it reels in a little bit. Okay. So don't go chasing this one. I don't think. Let it reel in a little bit. Have some patience. If the situation develops a little bit more, then go ahead. If you have some conviction about the stock, it's something to take a look at. But for me, I think just, have patience. You got plenty of time. There's plenty of stocks out there. This bull market right now doesn't feel like it's going anywhere. We do have the FOMC tomorrow. Some people are going to be keeping eyes on that for sure. So these are all the risk events that you have to sort of, let marinate. And then plus, you got the shortened holiday week next week, holiday week the week after that. So volumes are going to dry up a little bit, and we'll start keeping our eyes set on the new year and what the new administration might bring. All right, folks, so there you have it for my chart of the day. If you're here on Zacks.com, be sure to subscribe to the author. There's a button around here somewhere. If you are on YouTube, subscribe to the YouTube channel so you can check out all the videos that we got coming here from Zacks. So for everybody here, I will see you tomorrow again with another chart of the day.